Welcome to In Depth for a look at what is making mining headlines in the Americas. Uranium One has announced a transaction to give a Russian state-owned mining company a controlling stake in the Toronto and JSE-listed mining company. Lizzo Hill, our deputy editor in Toronto, joins me to discuss the issue. Welcome to the show. Hi. Can you tell us about the deal? What does it entail?
Well, the simplest version is that Russia's government-owned uranium miner, ARMZ, is going to take at least 51% in Uranium One. And in exchange, Uranium One will get stakes in 2 uranium projects or producing uranium mines in Kazakhstan, as well as $610 million in cash. ARMZ actually already holds 23% of Uranium One. It took 17% of the company last year in a transaction when Uranium One bought a 50% stake in another Kazakh mine called Karatau. And at the same time, the 2 companies actually formed a framework or a partnership agreement. This latest transaction is sort of a follow-on from that. Now, because Uranium One's shareholders are effectively giving up control of the company to ARMZ, the Uranium One is going to pay what CEO Jean Nautier is calling a change of control premium. And that will come in the form of a special dividend the company will pay out to shareholders other than ARMZ. And the firm said that will be at least $1.06 a share. And then in another related transaction that announced, or partly related transaction that announced at the same time, Uranium One has said it sold its shares in rival Paladin Energy. That company's got 2 uranium mines producing in Africa. And just in the last couple of months, Uranium One had revealed that it had increased or taken a stake in Paladin and then increased it to as much as 3% of the company. So that obviously caused a bit of excitement and chatter as far as M&A is concerned. But Uranium One has now said that it sold those shares. And the reason that it gave was just that it wanted to strengthen its balance sheet to make sure that it was in a position to be able to carry out the special dividend that it'll be paying.
And what does each side get out of this transaction?
From Uranium One's perspective, the company, these 2 projects that it's going to be acquiring, it's getting 50% of the Akbar style mine and just under 50% of the Zarechnoye mine, both in Kazakhstan. And those 2 operations, or its share of those 2 operations, will actually boost Uranium One's production, annual production, by 60%, and it's going to, it's expected to put the company among the top 5 producers of uranium in the world by next year. So Uranium One has been quite open about the fact that it's looking to pursue acquisitions. It was looking for acquisitive growth around the world, in fact, especially in Africa. And CEO Jean Nautier, he said when announcing the transaction that this really was the best deal that the company could put together, was this one with ARMZ. The 2 assets, in fact, the Uranium One will be taking a share in them, and the rest is held by the Kazakh government-owned miner Kazatomprom. And they are similar to what the company already has in Kazakhstan. The firm expects that consolidated cash costs for the group should remain below $20 a pound following the transaction. And Uranium One should also be able to get some synergies and some savings just because of the proximity of the mines to its existing operations. In fact, the Akbar Stau is literally right next door to Karatau, where Uranium One holds 50%. And then as for ARMZ, the company actually falls under the Russian state nuclear group, Rosatom, and which, like all the other utilities in the world, is going out and trying to secure supplies of uranium to feed the nuclear reactors. In fact, Rosatom's building nuclear reactors in various places in the world, so it's looking to make sure that it has the uranium to put into them. ARMZ and Uranium One actually already have an option offtake agreement that was following the Karatau transaction last year. But they're going to amend that and increase it, and in fact, ARMZ could actually end up with around 50%, an option on around 50% of Uranium One's production. Obviously, for the next couple of years, the company's already contracted most of its output, but as that is freed up, it will probably come up to around 50% that ARMZ will have a call on. And then ARMZ has also said that it plans to use Uranium One, in which it will then have at least 51%, assuming this transaction closes by the end of the year, It wants to use it as a vehicle for it to grow into other uranium operations around the world, the Russian company says.
Are there more deals to follow?
It seems that way. What ARMZ has actually said is that one of the reasons that it's perfectly happy to invest in Uranium One is that it likes Uranium One's approach of wanting to grow by acquisition, and it doesn't plan to change that. One of the regions that has been mentioned, in fact, is Africa. The company will continue to look for opportunities there. And then Uranium One also says that it still sees 1 or 2 opportunities available still in Kazakhstan. So it will be looking there, and then obviously they say they'll be looking all over the world for assets that they believe they can add value to, and then they can add value to the company.
Well, thank you, Lizzo. That was the show for today. Join me again next week. Martin Joaquin in Johannesburg.